You see in the headlines, Federal Reserve wants to loosen bank rules. Your brains go straight to 2008. You're thinking reckless lending, you're thinking a bubble, you're thinking a crash. Stop. That's headline thinking, and headlines keep you poor. The Fed is trying to flood the market with mortgage money again, but not for the reason that you think, and definitely not the results that you're expecting for San Antonio. Lower rates do not equal lower prices, and more money in the system does not mean you get a house unless you understand the strategy. By the way, hit that button right there. Let's talk about the money that they're trying to inject into your pocket and why it might just make your competition stiffer, harder. If you're looking into buying, selling, or thinking about your future in San Antonio real estate, you need to look past the Zillow scrolling. You need to look at the plumbing of the financial system. Check the plumbing. Here's the reality. Since February 2026, the Federal Reserve, specifically Governor Michelle Bowman, has been pushing a new proposal. The goal? Make it easier for big banks to lend you money for a home. Sounds great, right? Free money, sign me up. Not so fast. They're not doing this out of their kindness or their heart. They're doing this because the banks, the Chase, the Wells Fargos have been getting crushed. They left the mortgage game and now the Fed is begging them to come back. Today, we're going to be breaking down exactly what loosening capital rules means, why the government is suddenly desperate to boost mortgage lending, and the exact impact this hits on the San Antonio real estate market. Timing beats headlines. Let's get into the math right now. The Great Exodus and where we are here. In 2008, banks originated 6% of all mortgages. Today, it's barely 35%. Who took their place? The shadow banks, not bank lenders. They move fast, they're digital, they're convenient, and the Federal Reserve is terrified of them. Why? Because when a non-bank lender fails, they do not have a vault of deposits to fall back on. They just collapse. So the Fed looks at the housing market, which is a huge place like San Antonio's where new homes is the top search term, and they see a risk, a massive systematic risk. They regulate and nag the big banks like your Tia Maria after the last crush. They made it so expensive in terms of capital requirements to hold a mortgage that banks say, we're out, it's not even worth it. Now the government realizes they overcorrected because, of course they did. So here comes the U-turn. They want to lose the rules to lure the big money back in. They need the banks to stabilize the market. But what does the loosening rules actually mean? The rules are changing. I'm going to try to simplify this so we don't fall asleep. I know I am. Banks have capital requirements. It is the rainy day fund that have to keep by the law. Proposed changes specifically targeted someone called mortgage servicing assets. Previously, the bank had to deduct these assets from their capital. Basically, the government treated mortgages like a radioactive waste on a balance sheet. The new rules? They want to remove that deduction penalty. They want to let banks hold these assets without being punished for it. Second change. Risk weights based on LTVs, loan to value ratios. If you put more money down, the banks take less risk. The Fed wants to reward banks more for those safe loans. Translation: the Fed is telling banks, please start lending again. We promise we won't punish you this time around. This is a supply and demand change or supply change. They're trying to increase the supply of money. But here's the $1 million question everyone watching in San Antonio. If the banks are open to the floodgates, does that mean you get a loan? Or does it mean prices go up? Now let's look at the San Antonio impact. let's bring it back home here to San Antonio. We have thousands of people searching, living in San Antonio, Texas. Every single month, demand is real, but affordability has been the wall everyone hits. If a big bank re-enters the game aggressively, two things happen. One, competition for the safe buyer. Remember the LTV rule? Banks are going to incentivize to lend to people with bigger down payments. If you're a relocator or moving coming in from California or New York with cash in hand, or a local seller with equity, you just became the prettiest girl at the dance floor. Banks will fight for you for your loan. That means slightly better rates or better terms for qualified buyers. 2. The new build boom. San Antonio new home builders have been relying heavily on their own internal financing or non-bank lenders. If traditional banks get hungry again, we might see a surge in construction lending. More capital flow to developers means more inventory. But, and here's the kicker, lower rates do not equal lower prices. If access to money becomes easier, demand increases. When demand increases in a market like ours, San Antonio, where inventory is still tight in the good neighborhoods, prices do not drop, they hold, or they climb. The fear shouldn't be, is this market crashing? The fear should be, am I about to get outbid by someone who the bank suddenly loves more than me? This is not 2008 where they gave a loan to anyone with a pulse. This is 2026 where they give easier loans to people with equity. Now your strategy. So, what do? Sit on the sidelines with the Fed to figure this out? No. Timing beats headlines. Local strategy wins all the time. If you're a buyer in San Antonio, you need to make sure to look at yourself like that safe bet where the new rules favor you. Work on your LTV. If you have less than 20%, you need to strategy to compete with people who do, because the banks are about to start favoring them even more. If you're a seller, understand your buyer pool might shift. You might see more traditional financing coming back into the mix. That's good for stability. That means fewer deals fall through at the last minute because a sketchy lender went belly up. The headlines will loosely say, banks loosen rules. The panic sellers will say, they think this is a bubble. The smart money knows this is just plumbing fixing that keeps liquidity flowing. Do not trade based on national news. Trade based on what's happening in Stone Oak, in Helotes, in Alamo Ranch, and Alamo Heights. The Fed is moving pieces on the board. The game is changing, but the game remains the same. Building wealth through real estate. Do not let the math scare you. Let it prepare you. If you want to know how these changes are going to impact your specific home or your specific zip code or your specific equity position, stop guessing. Head over to this website right now and start searching today. Let's find you the right deal before the headlines figure it out what's actually happening right now. So a few months from now, you can watch this video right here from your brand new covered patio or your dream kitchen, coffee in a hand, smiling from ear to ear, and be like, wow, I'm really glad I didn't wait. Don't let your future self roll their eyes on you today. Like, share, subscribe.